Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Alun Williams of Parkwalk Advisors to talk about their EIS Opportunities Fund and Knowledge Intensive Fund. Hello Alun, welcome to the studio.
Thanks for having me.
Firstly, could you give us some background to Parkwalk and your own experience?
Yes, Parkwalk was formed in 2009 with the intention of investing in the innovation coming out of UK universities. If you look at our portfolio, you'll see that it represents the wide variety of research going on in universities. So we have companies in quantum computing, AI, digital health, clean tech, agri-tech, and advanced materials, amongst other things. In the 14 years we've been in existence, almost 15 years we've been in existence, we have invested in over 160 companies. We've now got assets under management of over 500 million. We've had 60 exits generating cash returns to investors of 150 million pounds. We are the most active investor in UK university spinouts, and we are the largest EIS fund by number of funds raised. As for myself, I was a long time ago a biochemist, but I've had a career in finance, basically various roles within investment banking. I joined Parkwalk in 2014. I'm a member of the investment committee, and my focus is in spinouts coming out of Oxford University because I help manage the feeder fund, the University of Oxford Innovation Fund, from Oxford. So basically I'm close to that deal flow.
Very good. But today we're talking about the EIS Opportunities Fund and the Knowledge Intensive EIS Fund.
Yeah.
What do they aim to do for investors?
In terms of the investment thesis, they are both very similar. They're both the same, in fact. So we invest in university spinouts. The difference in the two funds is that it's in the structure slightly and in the timing of the tax benefits. Mm-hmm. So as far as the Opportunities EIS Fund, which is our flagship fund, it's an evergreen fund, so it's open all year. An investor in that fund would get a portfolio of 8 underlying companies. There'd be a degree of diversification in terms of technology class and the stage of investment. And the tax benefits there would be timed alongside the point at which the investment occurs. And currently the deployment takes between 12 and 18 months. Mm-hmm. As far as the Knowledge Intensive Fund is concerned, in that case, the investor would receive a portfolio between 10 and 14 companies. Again, similar sort of diversification, but these would be all knowledge intensive companies. And in that instance, the tax benefits are related then to the timing of the closing of that fund at the end of the tax year. So at the moment, our Knowledge Intensive 3 fund is open, and that will close on the 28th of March 2024, or when capacity is filled.
And so what are you looking for in the companies you back in these funds?
Right, well, the first question we always ask these companies is, are you a university spinout? And obviously the reason we're interested in that is that inevitably these companies will be backed by great world-class science, with the founders probably being the best in the business. The other thing as well for a university spinout is that they will have been incubated by the universities over several years. The key thing to remember here is that commercialising IP for universities is a big thing now. And even in the time that we've actually been involved, we've seen an increasing professionalisation of this business, and the universities are taking it far more seriously. So they have invested themselves in this whole commercialisation of IP area. So teams have been developed by the universities that are just basically there to go out scouting for IP that could be commercialised, and working with the founders to start cultivating the business, creating the first team, going out there and basically looking to see if the IP is usable, are there patents to file, freedom to operate searches, and all the rest of it. So when us as investors come along, it's great because basically, you know, the company has probably already benefited from 10 years of grant funding. And one discipline that we've taught ourselves over the years is basically don't get too infatuated with the science. The science is compelling. There's no doubt about that. The questions that we then start challenging the companies with is the other stuff that is important. So is there a credible business plan? Is the team fit for purpose? Is there a market need for this technology? Increasing in this current market, of course, as well, basically is the financing plan resilient? And something else, which is very important from an investor's perspective, is there the likelihood of a valuable exit in a reasonable time frame?
And so how do you source these investments?
Right. Well, there are three sources. The first one is the universities themselves, and I've already explained that basically these technology transfer offices are there incubating these businesses. So we have close working relationships with many of the tech transfer offices of the universities, and we're proud to say that basically we've invested in spin-out companies from over 20 different institutes. It's fair to say that basically 80% of our deal flow comes from what's called the Golden Triangle. So that's Oxford, Cambridge, and the London universities, which we have very close working relationships with. And we have these feeder funds that are contributing to our deal flow.
And that's the separate university funds?
That is correct. So we have these separate university funds with 4 universities: Oxford, Cambridge, Imperial College, and Bristol. So the first source of these deals is directly with the universities. The second source is, well, we've been around for 14 years. We are the most active investor in this space. So it's not surprising that we get incoming calls from our co-investors. So basically, we participate in deals that are led by other companies. So that's the second source. And the third source, of course, is we've got a portfolio of 100 companies. These are all growth companies. So there's plenty of opportunity for follow-on funding from our portfolio.
So how much are you typically investing in each of these companies, and what's the typical round size? You said there are other investors typically that come in with you.
Yeah, sure. The first thing to say is that we're very busy. So we invest in roughly 50 deals a year. So that's a deal a week. That's across our funds, our various funds, including the university funds. If you look at the typical, or the range of funding rounds that we would look at is typically between 1 million and 30 million. And our ticket size will be between £500,000 up to £10 million, which is obviously the limit for EIS investing in any particular transaction. A typical deal will be probably a Series A round where the company is looking to raise £10 million and we will put in 3, with the rest coming from co-investors.
And does the current environment change the way you invest? So this inflationary, high interest rate environment?
I think it's fair to say that the last couple of years have been more challenging. The most obvious change that's occurred is just the time it takes to construct a syndicate nowadays and just to get the funding rounds complete. There have been 1 or 2 companies or 1 or 2 investors that have stepped away, but generally what we're seeing is it just takes longer to get these deals done, basically. Now, the good news is, judging by what's happening in the States particularly, which is very important, is that the interest rate cycle is perhaps coming back and so interest rates are coming down. But I guess every cloud has a silver lining as well. And what we have seen in the last year or so is that now we're seeing investments occurring at valuations that we'd not seen in 10 years or so. An example is that we were involved in a Series B round earlier this year, where the original asking price was 60 million pre-money, and we eventually ended up with participating with the valuation of 25 pre-money, with hopefully good outcomes for exit multiples.
So can you talk us through some recent examples of companies you backed within the funds?
Yes, absolutely. And you'll forgive me for a little bit of an Oxford bias. The first company is Oxford Endovascular, and that's a fascinating company, born of a collaboration between a professor of engineering and I have to be clear about this, an interventional neuroradiologist, which is a very clever clinician. The problem that they're trying to solve is one of brain aneurysms, and as you probably know, Jonathan, that's an increasing problem. Something like 1 in 50 people suffer from brain aneurysms. And the traditional treatment was for open brain surgery, where the aneurysm was clamped. Over the last 20 years or so, there have been new techniques, and the most promising technique is the use of what's called flow diverters, that are specialist stents. The problem with the first generation of flow diverters is they have various failure modes, primarily to do with the way that they are delivered to the aneurysm, and in some instances they're just not suited for many different types of aneurysms. What the team at Oxford Endovascular has done is developed a product, a new generation of flow diverter, which seems to be overcoming all the problems of the existing technology, which would be fantastic. Now, our history with the company has been that we invested from word go. So the company spun out in 2015. We invested our Oxford fund in the original round. Our opportunities fund was invested initially in 2018, and we're just at the point of investing our new round. The round is about to close, hopefully before Christmas, which will give the company the capacity to get to clinical trials and get first-in-man data. And if that is successful, that will represent a significant valuation inflection point for the business. So I guess the key messages from a Parkwalk perspective is that we got in early. We got involved in a business which, in an opportunity which is a large market opportunity. It's got the opportunity for a very valuable exit, because this market is run by the players involved in this market are highly acquisitive. And I think just generally, the observation is that medtech in this space and at this stage is very difficult to fund. And it's definitely the case that without EIS and arguably without Parkwalk, this company would never have been funded. So
yeah, very good
stuff.
Well done, Alan.
Thank you very much.
Any other examples?
The other one, again, I'm afraid, is another Oxford fund, this time an agri-tech company called Moa Technologies.
Yeah.
The problem that they're addressing is the fact that weeds are developing resistance to herbicides. And that's probably because there have been very little innovation in the herbicides market for a couple of decades. And it is increasingly a problem, because basically of the 26 modes of action of existing herbicides, weeds have developed resistance to 23 of them. And it's a big problem. Something like 13% of all crops can fail because of weeds. To say that's the equivalent of $50 billion worth of food a year. Or another way of looking at it is enough food to feed 1 billion people. Now, what Moa Technologies are doing, using state-of-the-art genomics and techniques that have been developed by life sciences and drug discovery, they are identifying new modes of action for herbicides and coming up with very interesting candidates for the next generation of herbicides, which would be fantastic. Again, it's an investment that we were involved with from word go. We've participated in every round of funding for Moa, culminating in the last round, which amounted to $35 million worth of fundraising. We're on the board of the company, and we're actively at the moment involved in reshaping the shape of the management team to make it fit for purpose for the next phase. They've just recently hired a big hitting industrial person for the chair, and we're changing some of the other personnel within the company as well.
Yeah, very good. Well, not so good for the people being changed, but
no, maybe not.
If we look at the wider Parkwalk portfolio, we look at some of the more established names. Any particular highlights there? Any real successes?
Yes, I would say, let me talk about one that I'm on the board of, a company called Mind Foundry, another Oxford spinout, this time from the Department of Engineering, and the founders there, the two professors in machine learning. So this is, Mind Foundry applies machine learning to high stakes, big ticket, real world problems. And they've got applications in insurance, defense, and infrastructure. Now, again, a very early investment for us. We first invested in 2016, and we've been involved in multiple rounds since then. And last year, there was a round of £18 million that we invested £5 million from the Opportunities Fund. We co-invested with some strong and influential co-investors. So 2023 for Mind Foundry has been excellent. There have been significant revenue growth, and we're very excited about the trajectory of the business. Because it is worth bearing in mind that all the talk about AI and machine learning, Mind Foundry is still one of the very few companies that are offering solutions which are being applied in the real world and solving some real big issue problems.
So Alun, what about exits from the portfolio? Any recent exits you can talk about?
Yes, indeed. So we're obviously very proud of the fact that we've achieved exits that have generated £150 million of cash returns to investors. Over the last few months, yes, we've had a couple of good exits, actually. One was a trade sale for a relatively early stage technology. The second one was one achieved by secondary sales into a oversubscribed funding round. And depending upon which tranche the investors were in, that achieved returns of between 1.5 and 10.5 for the underlying investors. In terms of specifics, we have PetMedix, which was a spin-out from Cambridge University. It was technology out of Professor Alan Bradley's laboratory, where the technology was originally applied to the development of human monoclonal antibodies. And in PetMedix, the technology was retooled for application in domestic animals. We were one of the first investors into PetMedix, and we were involved very closely with the sale, which was achieved, as I said, in August this year, after an auction, and the company was sold to Zoetis for over £200 million.
So some good exit examples there. If we turn to risks, how risky is this part of the market for EIS? See, lots of IP within these businesses, but how risky is this?
Look, this is early stage investing in technology companies, so there's no getting away from that, but it's risky. This is risk capital. However, we would argue that our strategy of focusing on university spinouts, which are sort of incubated through the efforts of the universities and have benefited from years of grant funding, is probably a good way of actually sort of getting involved in early stage investing in technologies. The other thing we'd say in terms of mitigation is that we do construct individual portfolios to have a degree of diversification in terms of the technologies and the stage of the business. Having said that, it's still all early stage, otherwise it wouldn't be an EIS fund. So what I would say is that there will probably be a failure, but we will aim to ensure that the successes outweigh the failures.
So finally, Alun, to sum up, for those that want to invest in an EIS fund this year, why should they invest with Parkwalk?
Well, obviously Parkwalk is an experienced EIS manager with a strong team, with conviction in what we do. Secondly, we've got access to a unique deal flow out of the universities. So we have access to companies that are doing great things in areas such as AI, machine learning, quantum computing, advanced materials, clean tech, agri-tech, and all the sort of areas that the universities are researching in. And thirdly, our track record. We've had consistent returns through our time doing this business, and we've returned £150 million to our underlying investors.
Feels like a good place to end. Alun Williams of Parkwalk Advisors, thank you very much.
Thank you.
If you're watching on YouTube, please press like and subscribe to the channel for more.